Hello everyone, welcome to lecture 2 of insurance companies. Now today we will start with the practical questions. In the last lecture we studied the format of insurance companies. Let us revise that format and understand what markings we will do with the question. Okay, I gave you the concept to remember the format, that you remember that there are 3 parts in insurance companies revenue accounts format and every part has 3 items. So 3 is a crucial number. 3 parts: major expense, small expense, big expense, and every part has 3 items. First part, income. There are 3 incomes. Premium income will mark it as P, investment income will mark it as II, income from investment, other incomes we will mark it as OI. Then second part, in the second part, expenses, small expenses, commission we will mark as C, operating expenses will mark as O, provisions we will mark it as PROV because P stands for premium. Okay, and in the third part, big expenses, 3 big expenses. Benefits paid, that is claims, we will mark as CL. Don't mark it as benefits paid B because this markings will help us in the formats of general insurance company also. So I am giving you the markings in such a way that whether you solve the question of life insurance or general insurance, the markings will remain same. So when we go to the next part of the chapter, you will not have trouble in understanding the markings. So benefits paid, but instead of B, benefits paid represent the claims, so we will mark as CL. Then bonus we will mark as B, and change in the value of liabilities will mark as L. Liabilities, so L. Okay, so 3 incomes: premium, investment income, other incomes. 3 small expenses: commission, operating expenses, provisions, and 3 big expenses: benefits paid. Benefits paid, but we will mark it as CL, that is claims. Bonus, that is B, and liabilities, that is L. Let us do these markings. Okay. From the following balances, as on 31st March 2018, in the books of Royal Life Insurance Company Limited, prepare a revenue account for the year ended on 31st March 2018. Now, first year's premium will come in premium income P. Okay, we have seen that premium is of 2 types, first year and renewal, and if all paid together, that is also considered as a single premium. Renewal premium also marked as premium income P. Employees remuneration will come in operating expenses, that is O. Rent, rates and taxes will come in operating expenses O. Printing and stationery operating expenses O. Medical fees operating expenses, legal charges operating expenses. Now insurance claims will come in benefits paid, that is CL. There are 2 claims, claims by death and claims by maturity. Interest and dividend is investment income, income from investment, II. Profit on sale of investment, investment income, II. Premium on reinsurance, now this I have told you earlier also, wherever ceded word comes we will, yes, come on, we will minus. Wherever accepted word comes we will plus. So premium on reinsurance ceded means P minus. Premium on reinsurance accepted means P plus. Ceded we will minus from premium income. Accepted we will plus in premium income. Commission direct. Now commission direct, so C. Commission we are going to mark it as C. Again, commission on reinsurance accepted. Accepted will be added, so C plus. Then commission on reinsurance ceded. Ceded we will minus, so C minus. From commission we will minus this. Auditors fees operating expense. Interest and bank charges operating expense. Now again, amount ceded in reinsurance we will minus. Now these are related to claims by death and claims by maturity. So from claims, that is benefits paid, we will minus. Same way, amount accepted in reinsurance we will plus. Again, claims by death and claims by maturity, so CL plus will added in claims by death and claims by maturity. Loss on sale of investment, investment income we will show it as a negative amount. Interim bonus paid, bonus we will mark it as B. So all these items first we will record it in the format of revenue account, and here we have to make schedules for which item. Premium is schedule number 1, commission is schedule number 2, operating expense schedule number 3, claims schedule number 4, that is benefits paid. All the other items, investment income, other incomes, provisions, benefits paid and liabilities, we will directly show in revenue account itself while making the formats itself. So very first of all of you, pause the video and make this format. Revenue account of Royal Life Assurance Company for the year ended 31st March 2018. One page format, all of you make it. 4 columns will be made. Particulars, schedule number, amount and amount. Pause the video and make this format. Yes, I hope everyone is done with the format. So first we'll fill the items in this format. Now first part shows 3 major incomes. First is premium income, that we will show in schedule number 1. So in detail we will be showing it in schedule 1 itself. Here we don't have to show any items. Now next item what we show is income from investment. Now for this we don't make any schedule. So right now itself we will record all the items over here. Let us record all the items marked as II, income from investments. For those items which we are not making the schedule, will directly record it over here itself. Okay. And one more thing, you can have appropriations also in the 4th part. So appropriations we would mark it as APP. In this question we don't have any appropriation, so our answer will end at surplus itself. But if appropriations are also given, you would mark it as APP, that is for appropriations. Now first item of investment income is interest and dividend 3,76,000. So directly we have to record it here itself. All of you write down interest and dividend. Inner column will write it 3,76,000 and total will take it in the outer column. Then after interest and dividend we have profit on sale of investment 1,42,000. So write down profit on sale of investment 1,42,000. Then after that, what is the next item marked as II? Check it everyone. Loss on sale of investment 32,000, that we have to show as a negative figure. Okay, minus means in bracket 32,000. No other item is there marked as II. So we can do the total in the outer column. All of you do the totals. 3,76,000 plus 1,42,000 plus, sorry, minus 32,000, 4,86,000. Okay, total income from investments are 4,86,000. Next, we will show other incomes. Now, do we have any item marked as OI, other incomes? No items are marked as other incomes, otherwise we directly show it here itself, so we'll mark it as nil. And then we will have total A. Now, second part we will show commission, 3 small expenses. We are going to show it in schedule number 2, so right now we keep it pending. We'll make schedule 2 for that in detail. Then we will show operating expenses. Now that again we will show in schedule number 3, so right now we keep it pending because schedule 3 we will be making in detail later on. Then we show provisions. Now any item marked as PROV? No item marked as provisions, so that will also remain nil. That will give us total B. Now after small expenses we will have 3 big expenses. So in 3 big expenses, first we have benefits paid. That we will show in schedule number 4. So right now we keep it pending, that we are going to show in detail. Then we have bonus. Now within bonus we have this interim bonus paid. Okay, B marked item. So interim bonus paid 1 lakh. For whichever items we don't have to make the schedule, we'll show it in the format itself. So interim bonus paid, the amount is directly one item only, so in outer column 1 lakh. And then we show change in the valuation of liabilities, where we had discussed we'll be showing closing minus opening. but there is no item marked as L over here. We don't have this item also, so we'll mark it as nil. And then we will get total of C. After that, we will show surplus or deficit. Okay, that will be obtained as D, and it will be obtained as D equals to A minus B minus C. So appropriations we don't have in this question, so we don't make the appropriations part. Otherwise, if appropriations are there, then that part will also be done. So whichever items we are going to make in the schedules, that we keep it pending. Other items we directly mention in the format itself. Now we make the schedules. All of you can pause the video and make this format of schedules. We start with schedule 1. Okay, schedule 1, that is premiums. Now premium income we will show in schedule 1, so all the items marked as P will be taken into consideration. First year's premium 7,50,000. All of you write down first year's premium 7,50,000. Then after first year's premium, which next item is marked as P? Renewal premium 4,75,000. So all of you write down renewal premium 4,75,000. Then after renewal premium, which item is marked as P? Premium on reinsurance ceded 1,50,000. We have to minus ceded, so we have to minus. So all of you write down less premium on reinsurance ceded. We have to minus, so write it in bracket 1,50,000. Then after premium on reinsurance ceded, premium on reinsurance accepted 75,000, we have to plus. So all of you write down plus, that means add premium on reinsurance accepted. What we have to add in that is 75,000. Now other than that, do we have any item marked as P? No. All the items of schedule 1 premium are taken into consideration. So do the total of schedule 1. 7,50,000 plus 4,75,000 minus 1,50,000 plus 75,000, that is 11,50,000. So that is the total of schedule 1. Now schedule 2 we will make for commission. Okay, schedule 2 will make for commission items. So all of you look at all the items marked as C. Very first we have direct commission of 1,05,000. So all of you write down commission direct 1,05,000. Then in that again we have two items of C. Commission on reinsurance accepted, we have to add 95,000. So all of you write down add commission on reinsurance accepted 95,000, and then we have commission on reinsurance ceded, which we have to minus 45,000. So all of you write down less commission on reinsurance ceded in bracket. We have to minus, so you write in bracket 45,000. So all the items of commission are taken. Now we'll do the totals. All of you do it. 1,05,000 plus 95,000 minus 45,000. That is 1,55,000. Now third schedule what we have to make after commission is of operating expenses. All the items marked as O will be taken into consideration. Look at all the items marked as O one by one. Employees remuneration 2,10,000. So all of you write down employees remuneration 2,10,000. Now after employees remuneration, which is the next item marked as O, rent, rates and taxes 40,000. So all of it write down, rent, rates and taxes 40,000. Then after rent, rates and taxes, what next we have is printing and stationery 37,000. So all of it write down, printing and stationery 37,000. Then after printing and stationery, what we have is medical fees 17,000. All the items marked as O. Medical fees 17,000. Then after medical fees, what we have is legal charges 12,000. So all of it write down, legal charges 12,000. Then after legal charges, what we have is O marked items, directly auditors fees. Okay, auditors fees 15,000. So all of it write down, auditors fees 15,000. Then after auditors fees, next item marked as O, interest and bank charges 7,000. So all of it write down, interest and bank charges 7,000. Then after interest and bank charges, any other item marked as O? Not there. So we can do the totals. Okay, no other item marked as operating expenses there. Do it everyone. 2,10,000 plus 40,000 plus 37,000 plus 17,000 plus 12,000 plus 15,000 plus 7,000. That comes to 3,38,000. So total operating expenses are done, 3,38,000. Now after operating expenses, fourth schedule what we have to make is of benefits paid. Benefits paid means basically claims. So all the items marked as CL will be taken into consideration. Look at the things everyone. What all items are marked as CL? Very first we have insurance claims. Claims by death 2,50,000 and claims by maturity 1,25,000. So all of it write down. Insurance claims in that claims by death 2,50,000 and claims by maturity 1,25,000. So total claims would be 3,75,000. Then in that, whatever is claims or amount ceded in reinsurance, we have to minus. So in that we have to minus death 45,000 and maturity 18,000. So all of it write down will minus less claims ceded in reinsurance. Within that we have claims by death. Now minus means you write it in bracket. Okay, minus means you write it in bracket. 45,000 and claims by maturity 17,000. So 45,000 and 17,000, total negative amount what we have to minus is 62,000. And then we will add claims accepted in reinsurance. In that again we will have two things, claims by death and claims by maturity. So see, accepted in reinsurance, what amounts we have to add? This accepted amount we have to add death 15,000 and maturity 5,000. Okay, there is a correction. This is 18,000 and I think I have written 17,000, make it 18,000. So 45 and 18, 63,000. And here claims by death and maturity are how much? 15,000 and 5,000. We have to add it, so don't write them in bracket. 15,000 and 5,000 total 20,000. Now we get the final amount of claims. Do it 3,75,000. From that we minus 45 and 18, that is 63,000, and we plus 20,000. So 3,32,000. 3,32,000 is total amount of claims. So all the 4 schedules are done. Now we will put these amount in the schedules in the revenue account. So this income from premium, what we got from the schedules is 11,50,000. Okay. So as per schedule 1, all of you write down premium income 11,50,000. Now total A can be obtained. So do it 11,50,000 plus 4,86,000. So total incomes are 16,36,000. Now commission as per schedule number 2, all of you look at it. Commission as per schedule number 2 is 1,55,000. So all of you write down commission as per schedule number 2, 1,55,000. Then operating expenses as per schedule number 3, 3,38,000. So all of you write down 3,38,000 for operating expenses. Then provisions are nil. So again we can get the total of second part. Do it everyone. 1,55,000 plus 3,38,000. That is 4,93,000. Then benefits paid, that is schedule number 4. So this was operating expense. Benefits paid are 3,32,000 as per schedule number 4. So all of you write down benefits paid 3,32,000. Now bonus 1 lakh we have in change in valuation of liabilities we don't have. So total of third part can also be done. 3,32,000 plus 1 lakh, that is 4,32,000. Now surplus or deficit D equals to A minus B minus C. Okay, A minus B minus C. So what is the amount of A we had got? 16,36,000. Doing calculator, 16,36,000 minus B 4,93,000. So if we do minus 4,93,000 minus C 4,32,000, or if we do minus 4,32,000, so that comes to 7,11,000. Okay, 7,11,000 is the final surplus. So this is how the questions are supposed to be solved. Okay, first you make the format of revenue account. In that you don't write the amounts of premium, commission, operating expense and benefits paid. For that we are going to make the schedules. But while making the format itself, you write all the other items, that is investment income, other incomes, provisions, bonus and liabilities. And then after that you make the 4 schedules and insert those amounts in the revenue account. Okay. So similarly we will solve question number 2. All of you take out question number 2. Okay, that also will solve in the current lecture itself. So take out question number 2. Yes, so look at question number 2, everyone, be attentive. The under mentioned balances from form, make it form, not from form. Okay, they form part of trial balance of the Hindustan Assurance Limited as on 31st March 2018. Claims by death will come in, benefits paid will mark them as CL. Claims by maturity will also come in, benefits paid will mark as CL. Premium P, expenses of management operating expense O, commission C. Now consideration for annuities granted, I have made you write it in the summary in the first lecture, that consideration for annuities granted is an income and will show it with other incomes. Okay, in the first part will be shown with other incomes. Interest, dividend and rent, interest income, investment income, rather income from investment. Income tax provisions, PROV, provisions. Surrenders will come as a part of claims, benefits paid, so marked as CL. Annuities also will come as a part of benefit paid, that is CL. So this annuity and consideration for annuities granted, we already discussed it in the first lecture, that annuities are the expense for the insurance company, they'll come in claims. Consideration for annuity granted is an income, and that will come in other incomes. Bonus paid in cash, B. Bonus paid in reduction of premium. Now this, if you remember, I told you that if bonus paid in reduction of premium is given in trial balance, it will have single effect, it will come in bonus paid in the third part. But if the same bonus paid in reduction of premium is given in adjustments, then it will have two effects. You will add in incomes also in premium income, and you will show it in expense also in third part. Here it is in trial balance, so it will have only one effect. It will be shown in third part as a bonus expense. Preliminary expenses not written off. Now preliminary expenses not written off appear in balance sheet, so put cross on them. They will not come in revenue account. Balance sheet is not a part of your syllabus. We have to make only revenue account. So preliminary expenses not written off will come in the balance sheet. Here therefore no effect. Claims admitted but not paid means outstanding at the end of the year. Now again, claims outstanding, if they are given in adjustments, then it has two effects. Add in claims as well as show in balance sheet as a liability, current liability. But since here they are given as a part of trial balance, if outstanding expense is given in trial balance, it has only single effect. It comes in balance sheet on liability side, so no effect over here. Okay. If same claim was given in adjustment, then we would have added in claims. Okay. But since it is given in trial balance, it would have single effect, that is in balance sheet as a current liability, so no effect over here. Annuities due but not paid, exactly same. Due but not paid means outstanding. Since it is in trial balance, it will have single effect in balance sheet as current liability, so no effect, put cross on that. Capital will come in balance sheet, so no effect. Government securities and investment, that comes in balance sheet, so no effect. Fixed assets also appear in balance sheet though, so no effect. So all these items will appear in balance sheet. Therefore, here in revenue account, they will have no effect. Now, what we are supposed to do, we have to prepare revenue account after taking into consideration the following. First, claims covered under reinsurance by death. Now, claims covered under reinsurance means ceded. Okay, claims covered under reinsurance means ceded. We covered them with some other insurance company under reinsurance. So that amount we will minus from claims. Further claims intimated by death. Further claims means after year ending, more claims of last year have been intimated by death. So we will add them in claims, CL plus. All of you can put tick on claims so that we remember that we have to record them in inner column and add these amounts. Again, further bonus utilized in reduction of premium 1500,000. I told you, if bonus in reduction of premium is given in trial balance, single effect, but in adjustment it will have two effects. We'll show it in bonus also, and we will add it in premium income also. Okay, two effects. So put tick on bonus as well as put tick on premium income. We have to add in both of them. And then interest accrued, will add in investment income. So put tick on interest, dividend and rent, there we will add it. Premium outstanding will add it in premium income. Okay, outstandings and accrued amount will add in respective incomes. So same procedure like previous question, all of you make the format. Revenue account of Hindustan Assurance Limited for the year ended 31/3/18. First we'll fill up the format and we'll put those amounts which are not to be included in the schedules. Then we'll make the schedules and complete this format. Pause the video and make this format, everyone. Yes, I hope everyone is done with the formats. So let us start with it now. First, premiums, that would come in schedule number 1. So right now we don't write anything. Then income from investment. All the items marked as II will be taken into consideration. Look at your trial balance and adjustments both. Income from investment, we have this interest, dividend and rent 52461. So all of it write down interest and dividends 52461. Now what else is marked as II? No other item in trial balance, but we have this adjustment for where accrued amount of interest 15,400 we have to add. Here you all mentioned rupees are in thousands. Okay, all the figures in the question are given rupees in thousands. So 15,400 means 15,400 we will add as interest accrued. Add interest accrued 15,400. So what is the total income from investment? We have no other item of II is there. 52461 plus 15,400, that is 67861. All of that down 67861. Now after income from investments, what we have is other incomes. Any item marked as OI in the question, this consideration for annuity is granted 10712. So all of it write down consideration for annuities granted amount is 10712. Only one item is there, so we directly take it in outer column. There are no other items marked as OI, that is other incomes. Okay, then we would get total A. Then after that we will have commission, for which we'll make schedule number 2. So here we'll not write right now. Then operating expenses, for which we'll make schedule number 3. So we'll not write right now. Then we will have provisions. Now what all items are there marked as provisions or PROV? This we have here income tax provision 3060. So all of it write down income tax provision directly in outer column. Only one provision is there, so 3060 directly in outer column. No other items marked as PROV is there, so we'll get the total B. Then after second part, third part, now benefits paid, that we will show in schedule number 4, so right now we'll not show it. Then we have bonus. All the items marked as B, bonus, will be taken in consideration. First we have this bonus paid in cash 9450. So all of you write down bonus paid in cash, inner column, first column of amount 9450. What else is marked as B? We have this bonus in reduction of premium 2500. So all of you write down bonus in reduction of premium 2500. Then after bonus in reduction of premium, in adjustments also we have this third item, further bonus in reduction of premium 1500. Further bonus in reduction of premium 1500. No other item marked as B is there in the question. So total of bonus amount 9450 plus 2500 plus 1500, that comes to 13,450. Now after bonus we will have change in valuation of liabilities. We have no items marked as L, so that is also nil. Then we will have total C. Then we will have surplus or deficit. That is B is equal to A minus B minus C. Okay, so all the items of format have been taken in consideration. Now we make the schedules. All of you can pause the video and make these columns for schedules. Okay, let us start with the schedule. First schedule will be for premium income. All the items marked as P will be taken in consideration. Look at it. Very first we have premium of 2,10,572. So all of you write down premiums 2,10,572. Now after premium of 2,10,572, what else is marked as P? You can see in adjustment number 3. This is marked as P plus. We have to add further bonus in reduction of premium 1,500. So you'll add further bonus in reduction of premium 1,500. Then after that you can see in adjustment 5 we have marked P plus 7,400 premium outstanding. That also we will add plus outstanding 7,400. So all of you do it. 2,10,572 plus 1,500 plus 7,400, 2,19,472. Okay, total premium. Then second note we will make for commission. Now commission, all the items marked as C will be taken in consideration. Look at it. Here we have commission C 26541. No other item is marked as C, so that itself is the total. All of you write down commission C 26541. 26541. No other item is marked as commission, so that itself gives us the total 26541. Then after commission we have operating expenses. Now what all items are marked as O, that is operating expenses, will take expenses of management 19890. There is no other item marked as O. Here also only one item 19890. So directly we'll write in outer column expenses of management 19890 and total also 19890. Now after operating expenses what we have is benefits paid. Fourth schedule will be made for benefits paid. All the items marked as CL, that is claims, will be taken in consideration. So very first we have claims by death 76980. So all of it are claims by death 76980. Then we have claims by maturity 56420. So all of it are in outer column 56420. Then after claims by maturity, what other items is marked as CL? Surrenders. Surrenders are 21860. So all of it are surrenders 21860. Then after surrenders 21860, we have annuities 29420. So all of it are annuities 29420. Then after annuities 29420, in adjustment 1 we have claim seeded of 10,000. That we will minus. So all of you write down claims seeded in reinsurance. 10,000 will minus, so write it in bracket. Then after claims seeded adjustment 2, we have further claims intimated by death 8,000 will add in claims. So further claims intimated by death 8,000. All of you write down further claims intimated by death 8,000 we have to add. That's it. No other items are marked as CL in the question. All items marked as CL are taken into consideration. So we'll do the total now. 76980 plus 56420 plus 21860 plus 29420 plus minus 10,000 plus 8,000. That comes to 182680. Okay, so all the items of claims are also taken. Now we put these amounts in the format. So very first, going up with premium, we have to show as per schedule 1, that is 219472. So all of you write down premium 219472. So now we can get the total of A part. Do it everyone. 219472 plus 67861 plus 10712. That comes to 298045. Then commission we get from schedule number 2. So look at it everyone. 26541. Write down everyone, commission 26541. Then operating expenses we get in schedule number 3, 19890. So all of you write down operating expenses 19890. Then income tax provision we have already written. So total of B can also be done. Do it everyone. 26541 plus 19890 plus 3060. 49491. Then benefits paid we get from schedule number 4, that is 182680. So all of you write down 182680. So here again we can get the total of C. Do it everyone. 182680 plus 13450 and liabilities are nil. So 196130. 196130. Now how do you get the surplus or deficit? A 298045. Do it everyone. 298045. From that we will minus B 49491. So do minus 49491. And from that we will minus C 196130. So do minus 196130. A minus B minus C. The surplus comes to 52424. Okay, the surplus comes to 52424. So this is the final amount of surplus and this is how we have to solve it. So with 2 questions you must be confident now how to solve these kind of questions. Okay. One more question we'll take up in today's lecture, that is question number 3. So all of you take out question number 3. Now look at question number 3, everyone, be attentive. The HDFC Standard Life Insurance Limited had a paid up capital of rupees 5 lakhs divided into 50,000 shares of rupees 10 each. No effect, it will come in balance sheet. Share capital will come in the balance sheet. Now, its net liability on all contracts in force on 31/3/18 was 48 lakhs. And on 31/3/17 this liability was 42 lakhs. So this will come in the third part liabilities, mark it as L. Okay, this what we discussed, this third part liabilities L. Up till now in both the questions we have been having it as nil. Both the questions what we have solved, this change in valuation of liabilities was nil. But what did I tell you in the formats we studied in lecture 1? We'll always find this liabilities as closing minus opening. Okay, so closing minus opening means this closing balance will get added and this opening balance 31/3/18 is closing balance of current year, 31/3/17 is closing balance of last year, and you can say opening balance of current year. So this 42 lakhs we will minus in finding that change in valuation of liabilities. So each and every point of your format has been covered in these three questions. All the points have been covered in these three questions. Next, the company has paid an interim bonus of 1,30,000, so mark it as B. It will come in bonus in the third part. And 20% of surplus is allocated to shareholders and 20% to reserve, that is appropriations. So only liabilities and appropriations were not covered so far in question 1 and 2. Both of them are covered in question number 3. That covers each and every part of your format of life insurance company. So your appropriations are also to be written in the format. The following figures are extracted from its books for the year ended 31/3/18. Premium less reinsurance premium market as P. Fees. Now this is which fees? It is generally a transfer fees which is collected by the insurance company if you transfer the vehicle in one name to another name, if you transfer the life insurance policy, nominees, make any changes, insurance company collects fees from you. If we are talking in terms of life insurance company, general insurance, they collect fees for transfer. Life insurance company collects fees for the other services they render. So this will be a part of other incomes, market as OI. Management expenses, operating expenses O. Commission, so C. Surplus on revaluation of investments, so will add in investment income II. Claims less reinsurance claims will come in benefits paid, but we mark them as CL. Interest, dividend and rent, income from investment II. Income tax will come in provision for income tax PROV. Annuities paid claims CL. Surrenders claims CL. Reassurances irrecoverable means bad debts, so that will come in provisions, will create provision for bad debts. Okay, irrecoverable means bad debts, so that will come in provisions, will create provision for bad debts. Consideration for annuities granted, just now in the previous question we discussed, it will come in other incomes. So prepare revenue account. All the left out items are also covered in this particular question. So all of you make this format revenue account of Standard Life Insurance Limited, and year ended year is 31/3/18. All of you pause the video and make one page format for this, and then we put the items other than schedules immediately, and schedules will make the schedules, then fill up the blanks. Pause the video, make the format. I hope you all are done with the formats. So let us write down premiums. We'll be making schedule 1 in detail for that. Income from investment. All the items marked as II. First we record this interest, dividend and rent. That is 14 lakhs. So all of you write down interest, dividends and rent 14 lakhs in inner column. Then after interest, dividend and rent, II marked is this surplus on revaluation of investments. Okay, surplus on revaluation of investments 10,000, that we will show in investment income. Only two items are there. Surplus on revaluation of investments amount is 10,000. So total income from investments 14,10,000. Then we have other incomes. All the items marked as OI. In that we have fees of 8,000. So all of it on fees 8,000 in inner column. Then after fees we have this consideration for annuities granted of 80,000. So all of it add on this consideration for annuities granted 80,000. Total we get in outer column 88,000. Then we'll get total A. Then we will have commission, that we will show in schedule 2 in detail. Then we have operating expenses, that we will show in schedule 3 in detail. Then we will have provisions. Now, two items are marked as provisions. Income tax 2,20,000. And reinsurances irrecoverable 8,000. Okay, reassurances irrecoverable 8,000. So total provision we have to create of 2,28,000. That will give us total total B. Then we have third part, benefits paid, that will show in detail in schedule 4. Then we have bonus. Now all the items marked as bonus will be taken here B. In the first paragraph we have this interim bonus. Okay, in the first paragraph we have this interim bonus of 1,30,000. No other item is marked as B. So only this interim bonus will be taken over here. This consideration of annuity is granted, we have recorded. Interim bonus all of it on 1,30,000. Only one item, so directly outer column. Then we have change in valuation of liabilities. Now here I told you we'll always do closing minus opening. So first we write liabilities as on 31,318. That is closing value. Okay, see in the first paragraph what is closing value of liabilities. You all can see 48 lakhs on 31,380. So that will write 48 lakhs. From that we'll subtract liabilities as on 31,317 or opening liabilities. They are 42 lakhs. In the first paragraph you all can find that. So 48 lakhs minus 42 lakhs will get 6 lakhs in the outer column. Okay, so these are also taken into consideration. Then we will have the total C. Then after that we'll have appropriations. Now here we do have appropriations also. So appropriations portion will also be done. Look at the first paragraph. We have appropriations also over here. Which is the first appropriation we have over here? 20% is transferred or allocated to shareholders. Amount we'll be able to find after we get surplus. So right now we'll just mention transfer to shareholders account. Okay, transfer to shareholders account. 20% of surplus is to be done. So that we will calculate later on. Okay. Then we also have transfer to reserves. In the first paragraph, that is also given 20% of balance is to be transferred to reserves. That also will be able to calculate only after we get surplus. So that 20% we have to transfer, release space for that. And remaining will be balance carried forward to balance sheet. Okay, and then total will again come same as total V. So that will show over here, total appropriations. Okay, we forgot to write surplus over here. After total C, we will have surplus, which will be obtained as D equals to A minus B minus C. Okay, and then in appropriations, transfer to shareholders account 20% of this surplus, reserves 20% of surplus, and balance carried forward to balance sheet. That we will do later on after we get the surplus. So let us first make the schedules. First schedule will make for premium income. All the items marked as P will be taken into consideration. So we have only one item, premiums less reinsurance premium, 28,60,000. premium less reinsurance premium 28,60,000. That itself is the total. Then second, we will make workings, notes or schedules for commission. All the items marked as C. Again in commission also we have only one item, that is 1,10,000. So directly we'll write it in outer column, commission 1,10,000. Total also 1,10,000. Then third working or schedule will make for operating expenses. All the items marked as O will be taken into consideration. Again only one item we have as O, management expenses 3,50,000. So all of it add on management expenses 3,50,000, and that itself will be the total. Then fourth, after operating expenses we have benefits paid, that is CL marked items. Now in CL we have claims less reinsurance claims 17 lakhs. Okay, so all of it around claims less reinsurance claims 17 lakhs. Then further CL more items are also there. In that we have annuities paid 25,000. So all of it around annuities paid 25,000. Then after annuities paid we have surrenders also. Surrenders 1,60,000. So all of it around surrenders 1,60,000. So all the items of claims are taken into consideration. 18,85,000 is the total. Okay. Now all the schedules are made. Let us put those amounts in the format. Very first premiums, what we have is 28,60,000. So all of it write down. Premium schedule 1, 28,60,000. Now we can do the total of this also. Total A 28,60,000 plus 14,10,000 plus 88,000, 43,58,000. Total A is 43,58,000. Then commission we have in schedule 3. Okay, so schedule 2 rather. Premium is taken. Now commission is 1,10,000. So all of it add on commission 1,10,000. Operating expenses we have in schedule 3, 3,50,000. So all of it add on operating expenses 3,50,000. Provisions we have already written. Now total. Do it. Total of B 1,10,000 plus 3,50,000 plus 2,28,000. That is 6,88,000. So B part is also done. Now benefits paid we get from schedule number 4, that is 18,85,000. Okay, benefits paid 18,85,000. Bonus written, liabilities written, so total is only to be done now. 18,85,000 plus 1,30,000 plus 6 lakhs. 26,15,000. Total of C is 26,15,000. Now we can find the surplus, that is D equals to A minus B minus C. So D, all of it in calculator, 43,58,000 minus B, that is 6,88,000 minus C, that is 26,15,000. So that comes to 10,55,000. Surplus is 10,55,000. Now, appropriations, we have transfer to shareholders account 20% of surplus. This surplus what we have obtained, that amounts 20% we will transfer to shareholders account. Okay, so it will be 20% of what amount? 10,55,000. Do it everyone. 10,55,000 into 20%, that is 2,11,000 we will transfer to shareholders account. Reserves also same, 20% of 10,55,000 will again be 2,11,000. And then transfer to balance sheet remaining amount. From 10,55,000 you subtract 2,11,000. Again you minus 2,11,000. So remaining 6,33,000 we will transfer to balance sheet. Total will again come to 10,55,000. Okay. How did we get this 6,33,000? From this 10,55,000 we have subtracted 2,11,000 of shareholders transfer, 2,11,000 of reserves transfer, and whatever amount remains we have carried forward to balance sheet. So life insurance revenue account, all the questions are covered. Now what you people can do is practice the university paper set questions of life insurance company on your own and bring the doubts to me. All the points of life insurance company have been covered. Next lecture we will take up with the formats of general insurance company. That will be all for this lecture. Bye everyone. Take care. See you in the next lecture.